What's up, everyone? It's Scotty with MoneyVest. So markets here just rolling over a little bit here intraday. So we did have the markets kind of push higher very nicely, especially the NASDAQ at one point was up close to 1% and then it rolled right back down. And the candles formed today certainly were a little bit more concerning because we are starting to get rejected at a certain level. And intraday, we did see the NASDAQ pretty much drop a little bit close to over 1%, which is not a small amount, something that I think is worth mentioning and definitely looking into more. And the S&P 500 did drop a little bit close to over 80-90 basis points here intraday as well. So hope you all enjoy this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos, Excel spreadsheets, and our Discord channels, including trade alerts, trade ideas. Everything is going to be included with that 16% annual discount that does expire tomorrow night. So on the 30th, November 30th is the last day for that 16% annual discount, and after that it is going to go away for good. And you do get access to all these benefits, including intrinsic value spreadsheets, my watch list, the valuation spreadsheet, of course, members only videos, and trade alerts as well. Been buying, a lot of ETFs and of course some individual REITs and of course individual stocks as well. But we'll be looking at buying more and of course trading options right now, considering how much the markets have moved up. So all alerts will be included in Discord. Link's going to be down below. This right here is the S&P, down about 10 basis points here on the day. So a little bit of a pullback from highs of 45.86. It has again dropped over 80 basis points, but the NASDAQ is the story here, definitely selling off a little bit over 1% intraday. So this right here was the entire move lower from 14,400 down to now closing in red, down to just under 14,260, about 16 basis points lower. And I think the Dow Jones was still green, pushing up over 13 points. But again, the candle certainly looks a little bit more scary at the moment. Now going over to, hold on one second, let me just bring that up. So this right here is going to be, and honestly, there was a headline. This right here is the headline, which is about, here's what it would take from the Federal Reserve to start slashing interest rates in 2024. Folks, honestly, sometimes I really feel that my content is being watched, and the reason for that is because sometimes a lot of these articles and reports and everything that I read is word for word. And if you've been watching my channel for quite some time, you will know exactly what I'm talking about. So this is what they said: interest rate cuts don't happen during good times. It's something important for markets to remember amid a hotly anticipated easing next year for the Federal Reserve. And interest rate expectations have indeed changed. They have flipped once again. If you take a look at where we are right now, 5 cuts, not 1, not 2, not 3, not 4, but 5 rate cuts priced in, and we have now moved further back. In other words, like earlier rate cuts. So earlier it was May, before that it was June, and now it is March. March 2024 is when the market's expecting the first rate cut to take place. And not just 3 or 4 anymore, but 5 total, for us to come down to 4 to 4.25% for that terminal rate eventually. But central bank policymakers, however, and this is something that I've said word for word in our previous videos. If you've been watching the channel for quite some time, you will know exactly what I'm talking about. And they mentioned central bank policymakers, however, won't cut for the sake of cutting. There will have to be a compelling reason to start easing, and even then the rate decreases are likely to come slowly unless something breaks and the Federal Reserve is forced into more aggressive action. I have literally said this in my previous videos so many times. What did we talk about? We said the Federal Reserve needs an incentive, right? The reason why the Fed would cut rates in the first place is because they are trying to fix something. They won't cut rates just for the sake of cutting them. They're not going to wake up one day and be like, you know what, let's just cut rates today. No, it doesn't work like that. They're going to do that to fix something. They need an incentive to do that. And until we get that incentive, until we get that reasoning, until we get that motivation for the Fed to do that, then I think the interest rates can obviously stay higher for longer. and economic growth continues to be super strong. We got the GDP numbers, 5.2% growth on a nominal basis in the US is really, really high. And this is what the market's pricing in, right? A huge easing rate cuts starting in March. March is like what, literally less than 4 months, 5 months away now. So they're expecting first rate cuts to begin in March, and there's clearly no signs right now, as it stands, and at the end of November, there's clearly no signs that that inflation's back down to the Fed's target, or economic growth is starting to slow down, or unemployment's going higher. So in the realm of possibilities, yes, rate cuts are possible in March, but the probability is quite low given today we don't have a lot of economic data or indicators suggesting for rate cuts, but the market definitely is. Is that? Let me make sure. 1, 2, 3, 4, 5. Yeah, so 5 rate cuts is what the market's pricing in. And that does open the market up to a little bit of that repricing risk, as I've talked about in my previous videos, because the market's priced in 5 rate cuts, the Federal Reserve's priced in 0 rate cuts, and that's the big discrepancy that we're dealing with right now. Now, the market keeps trying to front run these rate cuts only to be disappointed, says Kathy Jones, and chief fixed income strategist at Charles Schwab. In a different cycle, when inflation hadn't spiked so much, I think the Fed would have been cutting rates already. This is a very different cycle. This is going to be much more caution on their part, which, again, I do agree with. And this right here is the U.S. GDP growth of 5.2%. In the third quarter, even stronger than the first indicated number, which was at 4.9. So nominal GDP is insanely strong at 5.2% annualized pace. That is a very strong number considering the size and scale of the United States GDP. This right here is the entire market. So you can see Google, Meta, Microsoft, Apple rolling over a little bit. Amazon, Tesla also slightly down. We did have, again, semiconductors. We did have software. We had a little bit of financials, a little bit of medical devices, healthcare starting to push up. But other sectors, energy, we had healthcare plans, utilities, tech, comm services, even consumer cyclicals and restaurants starting to roll over. This right here, the entire market. So again, a little bit of that mixed today, but for the most part, intraday, we did roll over quite considerably here. So over the last one day, a little bit of that mixed market. Over the last 1 week, we did have real estate, cyclicals, financials, tech still pushing higher. Energy and comm services are the only ones that are rolling over. And over the last 1 month, of course, energy has been a underperformer because of the drop in crude oil prices. Everything else continues to move up very, very nicely. Cocoa prices up, lean hogs. We got rough rice pushing higher as well. Orange juice, oats, and lumber prices rolling over. Bitcoin here just a little bit over 37,000. Ether just over $2,000 as well. So going over to the advancing versus declining indicator here. So we had about 1,900 stocks declining. So again, fewer stocks declining yet the markets were down because the stocks that were going down were a higher cap, larger market cap stocks here. Stuttering a little bit, but that right there was the number. So fewer stocks declining, but yet the markets were still down because of the large cap tech and higher market cap stocks, including the FANG stocks, Magnificent Seven, selling off, which obviously led to S&P and the NASDAQ rolling over as well. So going over to crude oil first, U.S. oil here continues to trade inside this lower high pattern. So we are obviously getting rejected here. Support level is going to stay put at low 70s, $72, $73 a barrel. And if you do get a breakdown below this level, next support is going to be $65, $66 per barrel. So that right there is going to be in line with that previous support level for crude oil. Volatility here, slightly higher, up over 2.2%, so 12.99. It just kind of feels like it's gearing up for a potential spike in the VIX, which obviously could lead to the markets rolling over, a little bit of that risk-off environment going into maybe the next week or two. But seasonality-wise, December is usually the best month of the year for the markets. We'll find out if 2023 December is going to be somewhat similar or different. So that's really where we are inside this red rectangle in that red territory. Something to keep in mind that, again, the risk reward is not positioned well. And, I do sometimes get comments, even in my most recent videos. I did a video on my performance in 2023. And there was a few comments that were talking about, Caddy, you've been bearish all year, which is just not true. Like it just always amazes me how people would just put words in your mouth, and they would just assume that I was like bullish or bearish for an entire year. Folks, you can't be bullish or bearish on an entire year because things change. Like there's so many things, there's so many variables and circumstances that change over time that to have a pre-positioned view on the market for an entire year is just a recipe for disaster. So to say that I was bearish all year is like saying that, yes, January 1st, 2023, I came out here and said, I'm bearish for 2023, and that's it. No, I mean, things change so much, right? Things evolve and expectations change, right? Perspective and sentiment and technicals and fundamentals and macros. There's so many variables to change to have a position in the market that's fixed, right? It has to be constantly evolving and you have to adapt as well. And that's really what I commented back. I was like, I was not bearish all year. I've been buying in October of last year. I was buying in March of this year, and I was buying in October of this year as well. There's videos that have already been out there on YouTube, and I've done that. And our analysis is mostly on the risk and reward. Like, that's what I'm trying to explain. It doesn't really matter whether I'm bullish or bearish. All I'm trying to assess is the reward worth the risk at these levels? If it's not, I look for opportunities elsewhere, or I hold on to cash, or I don't really buy into this market. That's it. I don't care where the market goes, up or down or sideways, like bullish, bearish, neutral, kangaroo market, doesn't matter. All I'm looking for is opportunities. Where is the optimal risk reward? Where am I risking least to make the most amount of reward? That's all we're trying to do. So hopefully that makes a little bit of sense. I know I have to keep repeating myself over and over again over several videos, but that's because, you know, we've got a community that's growing and there's new people coming on board. So I think it's very important to kind of break this down, internalize these things, because I know what sells in media. Like, it's bullish, bearish, it's predictions, it's forecasts. Like, that's what sells in the media. That's what sells content-wise, right? Somebody making a prediction, right? That's cool. But you have to understand that from a actual usefulness standpoint, predictions are absolutely irrelevant. They're useless. Having a stance, bullish, bearish, is useless. What is useful is recognizing opportunity, recognizing risk, recognizing reward, and looking for where conditions are right? Looking for environments and conditions that are correct for deploying cash versus ones that are not so great from a risk reward standpoint. So to me, like, that's far more useful than me coming out here every day and just making a prediction for tomorrow and being wrong like half the time. That's not going to do anything. That's not going to help you, right? So anyway, volatility here under 13, support level, as we have talked about, we're very close to a 2 to 3 year low on the VIX. So if you do get a spike, of course, be ready for S&P to pull back. That is that negative correlation that we've talked about in our previous videos. Marathon has had a very strong month. It's up over 40%, not to mention CleanSpark is also up over 60%, and we've got Riot Blockchain, which is also up over 33% in the month of November, because Bitcoin is up very nicely, up over 8.9, almost 9% in the month of November, charging higher. The next target is going to be 48,000, so another $10,000 move to the upside is where the next resistance sits for Bitcoin. Now, going over to S&P 500 here. So you'll notice that, again, we're coming up to that 4,600 level, or we almost did come up to that 4,600 level, and including, you know, the resistance from the previous level from back in July. And you can see the sellers basically stepped in to bring us right back down. The RSI MACD starting to roll over, and intraday was a pretty significant sell-off here for the S&P. So got to be very careful. Next support is going to be 45.13. It's possible that we do see a bit of a pullback down to this level before pushing right back up in the month of December, considering how strong December month usually ends up being from a seasonality perspective. But looking at the risk reward, the long trades for me are currently off. I will be looking at selling calls at these levels, considering how premiums are going to be high and we are overextended, overbought from a technical perspective. Talking about the NASDAQ, same exact thing. You can see exactly pinpointed 14,400. You know, we talked about this level in our previous videos. Sellers literally just stepped in at these levels and resistance and sold right back down. Support level is going to stay put at 13,875 for the NASDAQ. Of course, we got a little bit of a gap to fill for the NASDAQ as well over there. Apple here, on the other hand, just starting to look pretty weak, down about 0.5%. Next support really is going to be down to 180. So that is going to be the level to watch. And of course, right now, it's a little bit of that higher high, higher low pattern. But like I said, this right here is going to be that next really important support level at around $180 per share. Amazon down about 0.5%. So again, starting to roll over a little bit from that resistance levels. This right here is an area of supply sitting roughly at around 146, 147, 148. And the next support really is going to be inside this green rectangle for Amazon. That's going to be sitting roughly between 134 and 136 for Amazon. And of course, I don't have to mention it, but the RSI and MACD, again, overbought, kind of hanging up there at those elevated levels for long. Tesla getting rejected perfectly, like literally at that $240, $250 level. So this right here is the lower high that we have talked about on the channel time and time again. So this is the downtrending channel within which Tesla is trading, right? So this is, you can see the lower highs and the lower lows. This is the overall downtrending channel, again, selling right back down. And the next support, really, really important support, is going to stay put in the low 200s for Tesla. Talking about NVIDIA here, NVIDIA also just kind of hanging up there at that resistance. And this right here is the overall consolidation pattern for NVIDIA, just been trading sideways in that range. And the next most important support is going to stay put at low 400s for NVIDIA as well. So that's right there. It's going to be that support, resistance all the way up here, all the way up here. So those right there are going to be a couple levels of resistance and areas of supply to watch in the $480 to $500 per share, with the support levels going to stay put at close to low 400s. Talking about advanced micro devices and AMD here, also incredibly overbought. So we got an RSI and MACD that is very, very overbought at the moment. And of course, support level is going to stay put at 121 all the way down to $112 per share for advanced micro devices. And of course, resistance all the way up to 130. I do have AMD right now. I'm super happy with the position, but definitely want to add more and add more shares in the 80s and the 70s. Of course, we'll find out eventually if AMD ends up trading down to that level or not. Talking about PayPal, and PayPal here on the day, again, selling off intraday quite aggressively. At one point, it was higher. It was up to $60 per share, but then, of course, intraday rolling over pretty aggressively. This right here was the entire sell-off, down about 3.7, almost 4%. $56 is going to be that next support level to watch, and all the way down to as low as $50, $51 per share, and a resistance up to as much as $65, $66. So we're seeing a lot of consolidation, as I've already talked about with PayPal. I think Alex Chris is doing a great job, but it's really just going to come down to a show me story. We're going to have to wait and see how the earnings and the growth and the engagement and the accounts sort of evolve over time under the new leadership. For Visa, support level is going to stay put down to 250 to as low as 245. We are, again, overextended, overbought here for Visa as well from an RSI MACD standpoint. So those right there are going to be a couple of support levels to watch very, very carefully, all the way down to as low as 228 for Visa. Visa is a fantastic stock, hitting a new all-time high right now. No doubt, for the long-term success on the company is very good. But of course, technically speaking, it is a bit more overextended, and not to mention the fair value obviously is a lot lower for me for Visa compared to where it's trading at the moment. Talking about Meta platforms, and Meta here also rolling over down almost 2%. This right here is the overall higher high, higher low pattern. So selling off from this higher high, and next support really is going to be inside this green rectangle for us to watch all the way down to as low as this higher low. So that's the overall uptrending channel within which Meta is trading. So if you do see some more selling pressure, wouldn't be surprised if it does end up trading down inside this green rectangle in the low 300s, 315s, 320s for Meta. Netflix, on the other hand, is starting to show some signs of a potential weakness. We've got the MACD almost crossing below that signal line, with the RSI also very, very overbought and now starting to show some signs of weakness. And support level is going to stay put down to 452, all the way down to as low as $348 per share for Netflix, and resistance is going to stay put at 485 for the company. So those right there are going to be some levels to watch for Netflix moving forward. Talking about Google already starting to show signs of weakness here, 1.6% sell-off here intraday. Obviously a little bit more than that, and we've got a little bit of a gap to fill here. Support level is going to stay put down to 126 for Google as well. Microsoft also rolling over down about 1%. Intraday was a little bit more than that. Support level is going to stay put down to 366. And we continue to see a little bit of that negative divergence that's forming. MACD almost crossing below that signal line. You can see it's about as close to zero as it gets for Microsoft. And next support really is going to be down to 366 to as low as $340 per share for Microsoft. And finally, we've got Enphase and Costco. So Costco here also rolling over down about 1%. Next support really is going to be inside this green rectangle, sitting roughly between 560 to 575. It did almost hit a new all-time high, but of course today down over 1%, starting to roll over a little bit considering the overextension, overbought territory of the stock at the moment. And finally, Enphase up over 1.88%, so a little bit of that outperformance relative to other stocks and other indexes. And I do believe that I think there's still a little bit more upside here for Enphase to get up to $108, $109. And of course, we're going to potentially fill in this gap for Enphase eventually as well. So hope y'all enjoyed this video and found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon, like I said, is going to be down below. You can access all the members-only private videos, Excel spreadsheets, intrinsic values, Discord access, including trade alerts, trade ideas. Everything's going to be included. Again, if you have any questions, feel free to reach out. And as always, happy investing. I'll see you all in the next video.